Hello, everyone. Welcome back to my channel. My name is Matan Hazanov, and today we have a very special guest, Jeremy Zuker. Jeremy built and sold multiple businesses in his very successful career as an entrepreneur, and he's also an angel investor. But even more importantly, Jeremy has a very unique story about selling his business and merging with another, and what are some of his learnings from trying to merge two businesses together and building another, acquiring others. And it's going to be a very interesting conversation, so stay tuned. So let's start off. First, Jeremy, nice to see you.
Nice to see you. Thanks for having me in.
Yeah, of course. Let's start with your background. You know, where'd you learn? How'd you get involved in entrepreneurship? What was the first business you built? All that fun stuff.
Sure. Yeah. Great question. So I grew up here in Toronto, went to school in the US and then in England. And I always had an entrepreneurial bug. So when I was living in England, my first entrepreneurial attempt, I was living in England, and back in those days, text messaging was a big deal. So when I moved back here, I decided I was going to start a text messaging business. And so that was kind of the first time that I really got into it, and started on two different businesses. The one that actually kind of took off was actually for aviation weather. So we had a business for aviation for private pilots to get the weather on their phone using text messages.
Oh, cool. When was that?
So that would have been early 2000s, or sort of mid 2000s,
Before
maybe
the
2005.
Yeah.
It was before the smartphone, and that was when text messaging was really, the new thing. So.
Oh, wow. So they get like text alerts about like weather?
Yeah, pretty much.
Yeah,
so
that's really cool.
So it started off as, if you're a private pilot, weather's a big deal, especially if you're, around Toronto, or weather's not always great. So you could spend a lot of time going to a lesson and then finding out, or going to fly and finding out that the weather wasn't ideal. So what this was is that you would send a code via text message, and then it would bounce back with the local weather report for that particular airport.
Cool. So that was your first foray into starting a business?
That was really my first foray into starting my business, starting a business, and kind of just jumped right in. The reality is, I think at the time I didn't really know that much, and just jumped into it.
That's great. So what happened after that?
So after that, we did that for a while. I had also worked on another business, which I called WagJag, which also stemmed from London. And the story behind that was, I lived on a street called Neal Street in London, and Neal Street has a lot of shoe stores. So in London, back in those days, shoes was kind of a big deal. And I knew walking to school and walking home from school, I would pass all these shoe stores. And I knew, because I lived there, I knew if I went right to the back of the store and found a rack, they had all these shoes they were just trying to get rid of. It was like the last pair they had, huge discounts. So I knew that if I would go back, I could find something. And as a student, that was, a good thing. But what occurred to me, there's so many people walking on the street, and the shoe stores and the people on the street didn't seem to be connecting. And so I really always thought, and I was studying economics, I really thought there's got to be a better way for that information to flow. Because if the people on the street knew they could get a great deal going all the way to the back of one of these stores, maybe they would actually transact. And if the shoe stores could communicate with those people, they would sell a lot more shoes. So that's when I, that was the other business. It was using text messages to try to create deals for individuals, in local areas. So it could have been that shoe store or restaurant where they would send a text and then get back a deal, based on where they were.
That's really cool. Yeah. I remember WagJag was one of the most successful competitors to Groupon back in the day. I don't know if people remember Groupon back in the day, where you can collate a bunch of users or customers and get deals from vendors and service providers and consumer product stores and all that fun stuff. But you actually had this idea before that, right?
So that text messaging thing was before. And what happened was I started working on that and ended up doing that aviation business that I mentioned. After that, I spent a couple years in private equity, which was really interesting, learning about business models, taught me a lot, some great people that I worked with. And then as I was doing that, I still had this entrepreneurial itch, always. And a few friends kind of brought to me what was happening with the deal space and with Groupon using email. And that's when I sort of went back to it and called that new business WagJag as well. The reason I did that was because, I remembered people always coming to me saying, remember that name. They forgot about me, but they remembered, I saw an email with WagJag. So I figured that was a name that people remembered. And the origin of that name is, it was actually a short code for text messaging. So in the early days, I don't know if you remember this, but if you wanted to say type the letter C on a phone, you had to push the number 2 3 times.
Oh, right.
You remember that?
Yeah, sure.
Yeah. So WagJag is 924524. The first letter on each of those numbers. So it was easy to type in.
Okay. That's
where it started.
Yeah. Makes a lot of sense.
Yeah.
So you started, or I guess you started WagJag essentially. And what happened? Take us through that journey. First of all, what was the core product? Was it the same as what you originally started with the text messaging deals, or obviously evolved? So walk us through that.
Yeah. So it was focused on email, and so we started off with essentially daily deals for local services. That could have been restaurants or other services, and we would send an email, and people would have this opportunity to get a deal. They could sign up for it. And essentially what it was doing was helping these local businesses advertise. So they could sell something at a discount. And the idea was they would get brand recognition and bring people into their store. People would try it and then get to know them. They provide a great service. People would come back and, spend more even, at another date, or even at that particular visit. They might say, if they had a coupon, they might use the coupon and then buy something else while they were there. So a lot of it was how do we structure those deals so that it was a win-win for both sides. And so that was 2009, and timing was great. That business was was growing pretty quickly, and we ended up talking to a large media company who I think at the time, they did a lot of local advertising. At the time, we're thinking, this is a new form of digital advertising. It's local and potentially a threat. Turns out, I think they were right. A threat to the traditional local advertising, which was through newspapers and local newspapers. So long story short, they ended up acquiring the company, and I stayed there for a few years after, and we built out a much bigger business. We had, at the peak, we had about 10% or so of Canadians had signed up to receive our emails.
Oh, that's crazy.
So it was a great ride. It was fun.
Yeah.
We built a big team. It was good.
At its peak, how many employees did you have? Revenues, that type of thing?
Yeah, we had around 180 employees at the peak, and we also worked with some partners throughout the organization. Revenue wise, we were in the 50 million range at the peak.
Wow, that's amazing. And it was acquired by Torstar, the same company that publishes the Toronto Star, which is a fairly well-known newspaper in Canada, right?
Yeah.
Which is I remember seeing that back in the day. For a couple of friends of mine also, we started a competitor to Groupon. Also didn't succeed so much because we were all in university and doing a lot of things. But you're I think the more successful company doing this in Canada, right? And this was at the time when there was billions of dollars going into the space. It was pretty crazy. So that amazing story. Yeah.
Yeah. I mean, it was a fascinating time. Certainly learned a lot in a lot of ways. I was, kind of thrown into that seat, and, we grew a lot. Had a big team. Fortunately, it was a great team, and we had, some great mentors around who were able to kind of guide us. I mean, one of the funny things that stands out, and I think kind of taught me a lot about the technology space, was right after we had done that acquisition, this is like in the first probably 2 weeks, we had this big outage. And when you're sending like an email to everyone, and there's like this short period where people can transact, if you have a technology related issue and people can't buy things, it's a problem for that day.
Mm-hmm.
So I remember we had this outage, and I was like concerned about it. I couldn't believe this happened, talking to our technology team. And I ended up writing this like little memo kind of explaining what had happened and what we were doing about it and everything. And my boss at the time, who was like the guy who had acquired the business, and still a really good friend, who was managing this portfolio of different businesses, he didn't even look at it. He just said, "Oh yeah, that's fine. Of course things are going to break, and of course we expect that. We expect things to break and have issues. The important thing is that we're just driving forward." So, taught me a lot about just this importance of moving forward and not, not getting too concerned about, a little hiccup along the way.
Hmm. So going from like starting the business to 180 employees is crazy within a couple of years, right? How did you manage that as a person? Like, what did you learn? How did you manage that as a leader? Like, I can't imagine that. I've never done that before. Um, yeah. What were some learnings you can share?
Um, I learned a lot along the way for sure. I think one of the things that stands out probably most was the importance of building a culture, or at least trying to build a culture and keeping that in mind. And, using that to provide a way for people to, relate to the business and what they're doing. So obviously we were helping local businesses in our business. But as we built out our team, all the stuff that comes along with that, um, doing fun things for the team and making sure people feel like they're really connected and taking feedback from everyone and providing ways for people to really contribute and grow with the team. I think at the time, I didn't appreciate how crucial that is in building a team and having the cohesion and, how important collaboration is. And you can really foster that kind of atmosphere when you are focused on it, and so that was probably, the thing that stands out the most about building a big team is,
Hmm.
intentionally having the culture that you think is appropriate for that company and for the kinds of people who are there.
Right. I think it's one of the most critical tasks of a CEO or business leader to set the values of the organization. And even more
Mhm.
importantly, is to make sure that the decisions they make are in line with those values. Because it's almost like parents with kids. Like the parents can say whatever they want. If they act in a way different than
Mhm.
their rhetoric, the kids will see that and they'll know that the
Yeah,
parents are BSing, right? It's the same thing
yeah, for
with a
sure,
leader of a
for sure.
business, right? So that I feel is one of the most critical tasks. What would you say is like, one of the main values you had when you were building this business? Like, oh, this is what we believe and what we must do as a company, either
Mhm.
external or internal.
Yeah, I mean the one that really carried through the whole organization at that point was, and I think, always was having integrity. And the reason that was so important in that business is not just for the reasons that it's important in every business, in terms of our partners and what we're doing. But when you're in that particular business in daily deals, when you structure a deal well, you can create a lot of value for your partner, for that local business. And if you structure a deal poorly, you might create a lot of value for yourself because we're selling it and people would buy it and that would work. But ultimately, it wouldn't work for that company. So we were always thinking about how are we creating a win-win and not thinking short-term, thinking long-term and building the partnerships.
Hmm.
That was probably the thing that I think, across the whole organization, if I think about some of the values, that was certainly a key one.
Right. I remember one of the challenges with that model in that space, especially with companies like Groupon, is that you'd have a spa that does like an advertisement, 50% off like a treatment or whatever.
Yeah.
But the users, the people that went and bought that service just did it for that discount. They're not they couldn't retain those customers.
Right.
And so yeah, people
That's
aren't
exactly what I mean though,
yeah.
right? So if you structure the deal well so that they
The
are more
benefits,
likely,
right.
right? So either it's based on the pricing or based on like what service you're actually offering. Are you offering, in that example, are you offering one treatment? Are you offering a handful of them, or those kinds of things, so that you can structure it so that they do benefit.
Hmm. So you sell the business, so you sell WagJag to Tourstar, and then you're there for a couple of years. How is
Yeah.
it like? Why did you eventually decide to leave Tourstars, and what did you do next?
Mhm. Um, I mean, we had grown the business a lot. I think after a little while, it just kind of came to the point where, being in a much bigger organization, it wasn't, sort of the entrepreneurial um, place that I personally thrive in. So I thought it was time to move on. And so, we figured that out and had, we had a pretty strong team and, figured out a transition plan. And I left to really go start some other businesses. That was really the plan. I wanted to learn about some different things. And
So
so
you could have retired, but you wanted to punch yourself some more, so you went to start another business.
well, I guess it all depends on what, Yeah, I mean, I really had a great time starting a business. I think it's one theme for me is it's a lot of fun. I think you're not having fun with it, then even though there's ups and downs, of course, then you know, if you're not having fun, you're probably not doing the right thing. So, but anyway, so I with one of the first people who joined at WagJag, we were thinking about different um, businesses that we could start, and we ended up starting a company called whereipark, which is a digital marketplace for monthly parking. And at the beginning, when we sort of just were conceptualizing this, I really wanted to learn more about coding and software. And so I had taken a course. Our CTO in the other business had recommended a course. I took this course, and I said to the Where I Park co-founder, when you're talking about it, I said, well, why don't I try to build this MVP, and you go out and you see if you can sell it. I'll build it, and we'll kind of go from there. So that original iteration of Where I Park, I ended up coding. I'm a horrible software coder, but it taught me a lot about how it all works, which I think was really, really helpful later on in understanding, you know, how software actually works. And when you talk to the software team, if you know what an easy change is versus a hard change is, I think it's just a lot easier to manage the product. But anyway, so I built that out and started to work. And so is initially this digital marketplace for monthly parking. Essentially, if you want to book monthly parking online, we made it really simple. We made it like an e-commerce transaction.
Mm-hmm.
And we realized after a little while, initially we focused on commercial operators. We realized after a little while that there was other supply in the parking industry that really wasn't even online at all. Never mind digitally online, but just wasn't even available. And that was through some residential buildings, multifamily communities, and there's a lot of REITs that own these residential buildings, and we would partner with them, take their excess capacity, put it on our platform, and then rent out the spaces to individuals, and essentially make it easy for the individuals. They could find great parking and a great price, and the real estate owners would have just a higher yield on their property. They would have, they would be bringing in rent from something that was essentially an empty piece of concrete before.
Mm-hmm.
And as we started to then get into the B2B side of the business. So instead of only renting out to individuals, we started working with larger groups that had fleets. So rental car agencies and construction companies that had fleets, and we would essentially help them find parking for those fleets.
Mm-hmm. And eventually, you merged with another business, right?
Yep.
So where at Park, you got to a certain stage, and you decided to merge. So walk us through that decision. Why did you decide to merge versus just keep going, as an independent business?
Yep. So what happened was we started working with this company, Spacer. They also had a U.S. Platform that was similar, more focused on the peer-to-peer side, and we started to work with them in the sense that they were providing leads to Where I Park, and Where I Park was providing inventory for them. And we got to know them, and we got along really well. Some funny stories about the founder of Spacer, in that he had also been, in the deals business prior to being in the digital parking business.
He's the U.S. version of you.
Well, he's the Australian version.
Oh, so the Australian version.
So he's based in
Okay.
Sydney. I was based in Toronto. But really, at the same time, we're about the same age, doing almost the same things, but on opposite sides of the world.
You look similar? That would be too weird. If you
Maybe, I don't know. I'll have to get a picture of him to show you. But we started working together, got along really well, and then essentially they had this idea of, if we merged the companies, we'd have a bigger presence, would be more of a global business, and get to another scale. So we ultimately ended up doing that, and it's been great. It was about 2.5 years ago. We've really brought together what we think of as a global team. So we would have had, just as an example, we had a marketing team, and they had a marketing team, and now we have one much stronger marketing team.
Mhm.
And the same thing across the board. So we really took the best of both worlds, and we built a much stronger business.
That's great. That's very
Yeah.
interesting. So what happened next? So you joined this company 2.5 years ago. You merged. You brought Where I Park, and then you went off and did another acquisition, right?
Hmm.
Scoop Commute. I'd love to learn more about that because now were you the CEO of this of Spacer, or what were you doing there after the merger?
Yeah.
What was your role?
Yeah. I guess technically I was kind of the North American CEO.
Mhm.
Um, Not super big on titles, but so I was sort of looking after the North American side, um, and part of the global company, and on the board of the global company. And as we brought the companies together, brought the systems together, and brought the team together. After a little while, we started to say, what else can we do that's outside of just this digital marketplace business for parking? We also did um, some other stuff around storage, which is very similar to parking because it's basically
Mhm.
a space on a monthly contract. And so we started to think about what else is there outside of that around mobility and transportation. It's really marketplace driven. It's really where our expertise is, and digital. And we looked at a few different things, and a friend of mine essentially brought us, or brought an idea relating to this company that had grown a lot, had essentially been faced with COVID, and COVID wasn't great for it, and they were looking to sell that business. And so we ended up acquiring the business. We've called it Scoop Commute, and what it is an app that helps coworkers and neighbors carpool together. So people driving, from their home to their office or the other way can pick up somebody along the way. Often it's a coworker, and share expenses. And the other thing that we do in the business is we offer this as an enterprise solution. So large enterprises can create a carpooling program and offer benefits to their employees. It's really important for a number of different
Oh,
reasons.
I see. It's not just the driver route is not generated by like I just have a car and space in my car. It's the company that's kind of supporting this and driving it.
Yeah, so it's an open network and anybody can participate. And then inside of that network, we can create, a layer for an enterprise where they can
Mhm.
introduce incentives for their employees, which is really important because typically an employee could spend, if they're driving to work, could spend $5,000 to $7,000 a year driving into work. That's
Yeah,
on wear and tear and
yeah,
gas and stuff like that.
I was commuting to Mississauga for like 4 years. And COVID kind of
Yeah.
restrictions made me not have to do it for that much time. But I mean, spending money on gas just going to Mississauga from Thornhill was crazy. It's like an
Yeah.
hour commute each way, and you're spending $100 a week. It's crazy.
Yeah. It really adds up. So the companies can support their employees and help them share these expenses, which is really meaningful for people who are driving in. And then the other things that happen are the company realized that over time, when coworkers were driving together, they got to know each other,
Mhm.
which was really great for building out the social fabric of the company. As an aside, I think post pandemic, now it's just such an important thing for individuals or humans to be with other humans, and we went through this period where we kind of took a step back from that. So I think carpooling is really a great solution for a bunch of reasons. And the other big ones are just around the amount of congestion seems to just be getting worse and worse. So if you put people in cars together, there's less cars on the road. Huge environmental impact for pollution, and that's important to lots of different companies. And so that's kind of that's what we really love about it. The other piece that really connects it, when we think about our parking business, it's we're helping essentially companies or real estate owners be efficient with their space. And in the same way that when somebody's driving a single occupancy vehicle and there's there's one space that's occupied and there's usually three that are empty, the same concept. We just think it's inefficient to have tons of these cars with one person in it when we could, combine people. So the
Mhm.
platform allows for incentives and kind of makes the whole thing work.
And this is unlike Uber, for example, where I'm going to dedicate a certain time of my day just to driving people around. I'm already going to the office,
Yeah,
hop in type of thing.
exactly. Yeah. So it's not professional drivers at all. It's really just coworkers and neighbors.
Hmm.
You could pick up a neighbor, you're going in the same direction. This happen like carpooling happens a lot.
Right.
There's millions, in some studies, tens of millions of people in North America who carpool every day. What the system does is help organize that. So we provide, a broader way of matching people in carpools, lots of flexibility around the time, and then economic incentives. People can share the expenses within the app. So that's kind
Cool.
of how it works.
It seems there's a thread here. You're always involved in marketplace type businesses, which any entrepreneur that comes to me before they start something and they bring to me a marketplace idea, I'm like, don't do it, man. Unless you hate your life, like don't start a marketplace business. It's one of the hardest businesses to build because it's hard enough to build a product and sell to one person or one type of, like a consumer. A
Mhm.
marketplace, you have to develop scale on both ends of it. Usually, you can be
Yep.
intelligent about it, but you've built a couple of successful marketplace type businesses. Um, First of all, why marketplaces? And two, what did you learn about building successful marketplace businesses for the people out there that I don't know why, but want to start a marketplace business?
Yeah. I mean, firstly, don't do it. Never,
Exactly.
like you said. I mean, I think, yeah, it is. It's definitely challenging. Personally, I like the market nature of it. Like it's like economics. You're trying to find places where the market will clear. But you're right. You do need to build scale, and you have to do that concurrently, right? You can't have just supply and no demand. You can't have demand and no supply. So you have to do them at the same time.
Mhm.
Generally speaking, you want to build supply first. So you want to have something for people to buy, so you can build that supply. I think one of the things that has been, really instrumental in helping build out some marketplaces is creating partnerships so that, you can essentially grow in big chunks. If you create a partnership, you may have, all of a sudden a huge amount of supply. And so you don't have to go one by one. So that's a key thing. And, really trying to keep a pulse on what's actually happening in the marketplace, really listening to the customers on both sides and trying to create a solution that's valuable for them is important. But you're right. I mean, you do need to have scale, and that can come by spending money on marketing or, what I've always preferred to do is try not to do that, so much and bootstrap a little bit more. And, you have to kind of just build it one step at a time.
Yeah, that's great insights because most people they don't realize for marketplace business to work, you really have to achieve a certain scale, right? You can't just go
Mhm.
out and sell the product. The product is the scale that you have in in most cases, right?
Yeah.
So you do have to figure out supply. And when I talk to entrepreneurs in the market building marketplace, they don't have a good handle on who are their actual customers, right? They
Mhm.
think sometimes they get it wrong. They think in your case, like in Uber's case, right? I think most people think Uber's customers are the riders.
Right.
They're wrong. Uber's customers are the drivers, right?
Mhm.
That's kind of the way. I mean, you can make an argument both ways. That's my perspective, right? But I'm pretty
Yeah.
sure Uber optimizes for having a certain amount of drivers that are happy using the system. You think that that's a supply. It could be if you look at the other way, but
Mhm.
I don't know. Curious to get your thoughts on that. Like, it'll take the Uber model. Who do you think is where do you think who's the customer and who's the
Right.
product?
Yeah. I mean, I think they have obviously different types of customers. You
That's
know,
also true.
um, I think what's interesting as you build those kinds of companies over time is that like within each you end up segmenting the kinds of customers, right? So on the demand side, for example, they obviously have individuals, but then they get into, what about the corporate customers? These are the kinds of
Mm,
partnerships, right? So you could have, and I know, companies like that do that. They'll have corporate partnerships so that, all the employees of a particular company when they're traveling, everything's taken care of, goes through their expenses and, or benefits packages. And so they'll build like big chunks, of demand like that. But I agree. I mean, certainly the driver side of that business you know, is critical, and
right.
that, I mean, that especially when they were starting, right? But you didn't, if you think about how it's a good example. You think about where they started, they picked a particular area of supply and of demand around, expensive kinds of rides, like high end SUVs, and really targeted that part of the market, and were able to be successful there, and then obviously continued.
Hmm.
So I think picking your spots is also important. It could be for a marketplace. It could be a specific geography where you want to create density in one area, or a type of customer, across multiple geographies. But it's pretty hard to boil the ocean in one shot.
Right, right.
Yeah.
We recently, a few years ago, I invested in a marketplace business, managed marketplace. So dealing with mostly business to business transactions,
Yeah.
intensely difficult business. One of the ways that they found a way to create stickiness around both sides of the marketplace is creating software on top to layer on top of that, not just the software to manage the marketplace, but software tools that both sides can use for some other purpose,
Hmm.
which I found pretty interesting.
Yeah.
But you've gone now through two exits slash acquisitions or mergers, I should say, where both were quite different. When you sold the business WagJag to Torstar, you entered a large corporate, right? When you merged with Spacer, you joined what I assume was a smaller, more nimble company. So there's obviously some differences there, but maybe walk us through kind of immediately what were some of the differences you noticed? How did you manage that? Which it sounds to me like you prefer the latter, but you tell us.
Yeah. I mean, there's definitely differences. I personally, I think I do better in the more nimble, you know, smaller organizations. That could happen in a big company where a division can be really nimble, or even the whole company can be. Some some interesting examples of pretty big companies that are doing amazing things and being nimble about it. But um, yeah, in the latter case, it was like a partnership, been a collaboration, and so it's been great. I think anytime you sell a company, if you're the founder and it's kind of your baby, or you've been doing it with a handful of people, um, you really think of it, like that. It really is like your creation. And so I think anytime you sell it or part ways with it, there's going to be some wondering of what would have happened if you went a different way. But um, just I think if you kind of objectively take a step back and look at like what's the best thing for all the stakeholders that are there, the customers, the employees, and you can create a situation that's good for everybody. And also, as sometimes a company just gets to the point where it's ready to join something bigger that may have more distribution, or more resources, or provide an opportunity for the people who are there to go focus on something else because they want to focus on something else. So
Hmm. And correct me if I'm wrong, but you didn't, for either of these businesses, you never raised traditional venture capital, right?
that's right.
My gosh, why do you
Yeah.
hate why do you hate VC so much? I take it
I
personally.
don't hate all VC. I mean, you're a really nice guy. I mean,
Yeah.
no, I don't. I mean, I think we've thought about it a lot, um, and especially in Where I Park, we had a lot of companies or a lot of VCs wanting to invest. Um, in some ways, we were lucky on that one just because we had done the first one, so it made it easier to not raise money to do another business. Um, I think it's a question of how fast you want to try to grow the business, and who you want to have as partners. So in some cases, obviously, it makes a lot of sense. You need capital to go really fast. We chose to go a little bit more slowly, but have more control and have more of a say in what we did. But I think the key message is really, if you're thinking about raising venture capital, um, understand what it is, understand how it works, and also really understand who the VCs are, who in fact
Hmm.
in any kind of partnership, who those partners are, how they conduct themselves. Because the last thing you want to get into as an entrepreneur, or honestly anyone, is a partnership that's with another group or another person that doesn't kind of see eye to eye on things. Because no matter what happens, you're going to come to a point where something you didn't imagine is occurring. And if everybody's like reasonable and, on the same page and wants to do kinds of the same things, then you figure it out, because, the contracts, they can't cover every possibility that's going to happen. So,
Mhm.
so you want to be working with reasonable people and avoid, unreasonable people or people with a different objective than you have.
Right, right. That's an important point because, contrary to what some people may think, VCs are not all made equal. Some of them suck, not me, of course, but some of them, listen, I've dealt with some pretty terrible co investors and not so good investors. Um, and some VCs, like, you should never take their money, even if they offered it to you. And for some entrepreneurs, it's tough because if someone's willing to invest in them, it's their lifeline a lot of the time, right?
Mhm.
But I have a separate video, 10 signs of dealing with a toxic investor. Check it out. I'll probably leave a link down below. But there are toxic investors out there. So that's 100% true. You should avoid those people like the plague. But
For
you're
sure.
making a separate point also, which is a good one, that you had a choice. There's a decision that entrepreneurs need to make at some point, the ones that are successful. It's, do you want to go super fast and raise that VC capital, bring on a partner that you may not know that well, that you know, and lose some control, which happens. That's almost certainly going to happen. You're going to lose some control at some point, and it is a certain treadmill. Like, once you get on, it's very hard to get off because they're expecting a certain amount of growth. They want you to get to a certain size for it to be worth it, and that's just a different type of business. Or you can go the other route. You can go more slow, build more slow, and maybe have a lower exit amount, but you have more control and just a very different type of business. I'm curious why you. So I understand you made a certain decision, right? But why did you decide not to go kind of let's go build a unicorn and go ham versus the direction you went, which is let's go more slow and keep more control? Like, what about, like, why?
Hmm. I don't know. I mean, part of it, the honest answer is part of it, I think, is in some ways we're kind of waiting for the right moment to, like, obviously if your business is growing and it's going well, the longer you wait, the better, kind of a deal you would create with the VC. And I think, we sort of thought about it a lot. One of the things, in Where I Park, I know we asked ourselves all the time is, if somebody gave us a big check, like, what would we do that would be different than right now? And we never really had, like, the best answers for that, because we were fortunate in that we weren't, entirely capital constrained. Also, another interesting thing about these businesses is that they generate negative working capital. So
You're collecting money up front.
Yeah. So so capital wasn't really the barrier for us. Like, if we saw an opportunity, if we wanted to hire someone or, do something, we would generally do it. So, so that's part of the reason we asked ourselves that question, and we didn't have a great answer for it. Why would we, pursue that? Because then we'd be getting ourselves in a situation where, we had to grow, much faster,
right?
To meet everyone else's objectives.
It's a great point.
That was
by
part
the
of it.
way. Yeah, it's a very good point. I come across a lot of entrepreneurs, especially early stage, so seed stage companies, and they put like, oh, we're raising $10 million. And when you ask them, like, okay, realistically, what can you do with that? And most of them don't have a well thought out kind of response. They can create very fancy financial models, but oftentimes they don't need the amount of money that they're asking for. And so that's a great question. You start from, like, what would we actually do if we raise the money?
Right. I think once you get to, so now, once you get to a different scale, and obviously getting to that scale is important, so you have to get there. But once you get to a different scale, then you can start looking at projects that are much bigger, and maybe you do need to capitalize those in a different way. Like, maybe it's an acquisition that's going to transform the business or transform a part of the business. Or, you want to grow your sales team from, 10 people to 40 people because you've really found product market fit and there's a huge market and you want to do that. And if you go slowly, you're going to, maybe you'll get there, but it might take you a couple years. Whereas if you had the capital, you could say, like, there's this opportunity, let's take advantage of it right now because we can do it. And you need to hire 30 people. That's going to be expensive. So, so there's definitely a time and a place. And I think as the company scales, it becomes probably more relevant to, to work with capital partners.
Mm-hmm. Right. So you're also an angel investor.
Yep.
Curious, being an operator and an investor, what lessons do you take from being an operator when you're looking to make angel investments?
Mm-hmm. It's a good question. So I spent a couple of years in private equity doing leverage buyouts, many, many years
Oh,
ago.
the fun stuff. Yeah.
And one thing that I this is what I remember. So I remember like we would be looking at a business, we would spend, I don't know, we'd spend months analyze. I was just like, an analyst. We spend months as a team, like analyzing the industry and understanding the business and really starting to think that we knew the business better than anyone, like we knew that industry, do all this work. And I remember at the time even thinking, oh, like we've done so much work on this, like that, we even know more than the management team. And now that I've been, operating businesses for, for 15 years or so, I realized that was completely false. And the management team actually knew way more than we did. So I think, if I'm looking at, supporting a business, thinking about it in those terms is pretty important. Like the management probably knows their industry and what's going on, really well. And you can almost, what I try to do is, be helpful and, maybe explain a situation that I had that was similar and kind of how it worked out. And maybe that's relevant to, an entrepreneur who's creating a new business in a startup.
Mm-hmm.
But I think it's important. Like the operators really understand the business in the marketplace
One
the
would
best.
hope.
I think they really do,
Yeah.
right? I mean, you may see this in the VC world where you can add value, but the person or the group running the business, they always have like the best
Right.
feel for what's happening. So, you have to really partner with them.
You have to trust them to run the business.
You have to
right?
trust them for sure.
VC value add is very elusive. I know it's talked about a lot in startup land, but it's often more talk than it is action. And as we wrap up here, do you have any advice for entrepreneurs that are struggling right now? It's very tough out there to raise money. It's a very tough economy. And yeah, any final words for us entrepreneurs that are watching this?
I mean, my advice is always a couple of things. So, trust your gut on, on whatever the situation is. I think in a lot of cases for entrepreneurs, and I struggle with this sometimes, is kind of waiting and trying to make something perfect. So you're going to launch something, you want to wait for it to be perfect, and I think the advice is don't worry about things being perfect. Just start.
Mm-hmm.
And one of the phrases that I've used or heard used is like you need to step off the curb and like get into traffic, and then you can start to see what's happening and figure out what's going to happen in the business. So I would say definitely just go for it. And try, and then you'll learn as you go, because it's not going to be perfect on the first iteration, and it may not even be the exact business on the first iteration, but you have to kind of get yourself into it and started to, to really see what's going to happen and understand.
That's great. Great piece of advice. Jeremy, it's so great having you. I learned a lot myself.
Thanks for having me.
Awesome,
Appreciate
man.
it.
Thanks.